One time for the underdog. One time for the underdog. You got the world on you.
What's going on, everyone? Welcome back to the FX220 YouTube channel. If this is your first time watching, this is Oussama, expert Forex trader and mentor. And basically what I do is I like to kill the markets and I teach other traders to do so. So in this video, we're going to go through my analysis behind the GBP JPY trade that I took yesterday. So we're gonna make it a quick video and straight to the point. We'll analyze exactly why I did take this trade and the confluences behind it and everything. So looking at this, the trade was on Monday. This was the start of the week. As you can notice, there is a bit of a gap, or as you can call it. This was the start of the week Asian session. There was nothing in particular, so completely set out Asian session if you can't see like something significant in it. So we already know that this market is on a downtrend simply by looking at these lower lows, lower highs. We have our EMAs crossover. So the cycle is a downward cycle. So we're following this. We're trend in line with it. As you may already see, we're having all our key levels, trend lines, from our top down analysis. Notice here how we have many support and resistance levels. So, and these are respected, as you can notice here. Notice here how price came down and respected these levels and couldn't close below them. Exactly, then price went back up again for one of our levels and our EMAs. We can also plot the fibs to see on which level the price was sitting at. So I did this and I found out that it was on the 50% fib retracement level. So it's a basic ABCD pattern, something like you see market comes here, then comes back here to one of our fib levels, and then boom, goes to the extension levels, which are our targets. Very simple pattern that I've explained many times ago in my videos. And notice here how it was like a very respected level, the 50% fib level. So we have our head and shoulders formation, the 50% fib level retracement, and our solid confirmation candle, and I was in. So my target was at the next support level, because market could simply like bounce from this level, could touch it and bounce. As you can see, it was respected. Market could not close below this level here, only after it broke, then retested and came down. So my target was exactly at this level, which was at 36 pips. My stop first was around here, the setup's high, then I kept lowering it until price was around here, which was like 30 pips in the money. So boom, I traded the stop loss and locked in some profits And this is exactly what you want to do. You don't want to turn a winner into a loser. I mean, I was 30 pips in profit. What you should do is like say to yourself, okay, I'm 30 pips in profit and I didn't close the trade yet. So why would I let it go into a losing trade? Going from 30 pips profit then to a losing trade is something that you shouldn't do. We're not in the business of losing money, as you already know. So even if market bounces back and hit your trade stop here, I mean, you just scratch that trade and forget about it and look onto the next one. We want trades that have these strong impulses without very significant pullback. The reason you see me drawing all this arrow always and right into it a number of pips. So notice here how I didn't put this arrow here or here. I only measure the move that is like the easy move, the move that when market trended, never pulled back. And this is how you can go sometimes to widen your take profit and take more. This is how you learn that from your entries market usually goes for way more than your take profit, your initial take profit. When you journal that, let's say you check your journal, you see after your entries market always goes for more. That means your entries are great, they're on point, they're early, and you know you've done your analysis right. So every time your analysis is right, the pattern is good, the correlation is good, you notice that market goes for a payday. Let's say it goes for here more than 50 pips and you're still taking 20 pips, 25. So you may want to look into taking in a bit more. But as I said, this is only after you get experienced, after you have like a respected number of trades to get the feedback from, to learn from. And this is how you can take more. But if you're still trying to master the strategy, trying to master your trading, stick with 20 pips, 25 pips max, and master these setups, master your entries, and only after that you can widen your take profit and go for more. So this trade met all the criteria. I mean, we're aware of everything. Let's check out the correlated pairs. Let's pick up any yen pair, something like CAD, JPY, and look at it at the exact same time of our entries, which was here start of New York session. Notice here very weak, very weak, which what this signifies is the yen is very strong, and when we are entering we want a weak pair against a strong pair. So the pound at around the exact same time was reversing. As you can see, the start of New York session was reversing down, doing nothing, while the yen was very strong, and you can see it here. Let's check out all the yen pairs. We had like dominant correlation confirmation from the other pairs. Same thing, AUD JPY and ZD JPY, basically the same thing. The yen very strong. Euro JPY, same thing, it was falling. USD JPY. So basically this is 100% confirmation and correlation from all the other pairs. And this is exactly the kind of trades that you want to take every time. You want a weak pair against a very strong pair, and as you can see it here, a very easy move, a zero drawdown entry, straight into profit. That's it. That's what you want to do. You just have to keep it simple, guys. I mean, you're trading a system that provides you only like high quality setups, only valid trades, and when doing that, I mean, that's the goal, that's the end goal of every trader. That's the dream of every trader, to trade a system there is high win rate and when the wins are bigger than the losses. So this is why we don't do like too much risk reward. We don't focus on it, because even if you get a loss, you will scratch it at a minimal rate. You never let it hit the full stop loss, because you realize that you're wrong and you scratch it at minus 5 pips, 9 pips, 10 pips, 15 pips at max. But when your wins are always 25, 30, 40, 60 pips, and your win rate is very high, it's 90 to 100%, I mean, that's the holy grail. And I highly encourage you guys to learn this. I mean, you've seen it here. I've proved it time and time again. I've been trading for a very long time now, successfully with this approach. My students also have been able to do the same thing. So this stuff really works. I highly encourage you to study it. And I've got countless of videos on my YouTube channel explaining the system and the approach and the method that we trade. So I highly recommend you guys to study this. It's a complete professional approach to trading that is not based on speculation or anything else. It's based on never take an entry when you're not certain of the trend. So we're only gonna take the high probability setups, the winning trades, zero drawdown entries, and traded stop loss. So basically the risk is very minimum, very minimum. So I hope you guys like this video. Please be sure to subscribe and like and share it with all your Forex friends. Also, don't forget to follow us on Facebook and Instagram, where I post daily articles and I'm sharing all my trading knowledge with you guys. So thank you so much for watching. I'll see you on the next one.